Good morning, good morning, good morning. Here we are, Monday, August the 10th. We got about 10 minutes before the open. So you can see here already I've marked out my 8 a.m. lows and my 8 a.m. highs. We're currently below our prior day high. We have some higher bullish objectives here. We have New York midnight open at around the 875s. We have London highs around 984s. We have our major exterior buy side liquidity up there at the 30074 area. What I'm kind of looking at now, let's take us up to the, let's start with the monthly. Why not? So let's take it all the way back from last week and even prior to that. So we tapped into this on July 1st. We tapped into this monthly fair value gap. As soon as this was what we were waiting for. As the market pulled back, we had a bullish trend up. The market pulled back into this monthly fair value gap. We've seen a rejection at around the 27,217 area, and we continued upward. So as we got in, a lot of people got into their buy positions here in this monthly fair value gap. And then as we get into the daily, we seeing this daily fair value gap here, and a lot of positions were created as we expected, a continuation upward. So I'll mark this out here. This is the daily. This was a small daily fair value gap that was created here. We've seen a pullback, and we were looking for that continuation upward. Likewise, here we have this daily fair value gap between the top of this candle and the bottom of this candle's wick here. We pulled back into this area here on the 6th, on August 6th, and we were pulling back down into here, and we hit consummate encroachment of that daily fair value gap, which immediately gave us a rejection upward. So likewise, so today we're here. This was our prior week's candle. This was Friday's close, that daily candle here. So we're on this daily candle here. We're looking into a pullback down into this daily fair value gap. I marked out this line here, which would be the tip of that that daily OB here. This is the order block here, but this is tentatively an interior order block here. So I'm looking for at least a pullback into that area there, maybe even before that, but targeting there to the top of that daily order block, which would give us the sweep of our 8 a.m. lows. We don't necessarily have to pull back all the way into there, because we do have higher time frame PD array there, being that 1 hour fair value gap, which we're currently in right now. We're in this 1 hour fair value gap. We also have a 15-minute fair value gap here. So typically speaking, in a perfect scenario, I'm looking for a pullback to sweep these 8 a.m. lows, maybe into consummate encroachment of this 15-minute fair value gap, and then looking for a lower time frame inversion, maybe a 1 minute inversion, if we can get down and create some type of fair value gap on the 1 minute or the 5 minute, the 2 minute, 3 minute, somewhere around there. We'll see as at the open an inversion of a lower time frame fair value gap, and then we'll look for an entry and target these 8 a.m. highs. So that's what I'm looking for now. Right now, price looks like it's going higher. We're looking at a bullish sentiment here. Doesn't mean we can't pull back and sweep this area first at the open, or it could just continue higher. But according to my strategy, according to my model, I'm just going to wait. We have already inverted this 5 minute fair value gap. I have taken trades before the open, but from my experience, I'm just going to stick to my rule, because if you look here, you can see that we didn't sweep these 8 a.m. lows yet. So I'll go to the hourly time frame. This is our 8 a.m. candle here. This is our 8 a.m. low. It stopped just before that, which tells me it's engineering liquidity there. It looks like some engineered liquidity with these equal lows. So that's the 1 hour. If we go to the 15 minute, you can see these engineered. We have this low here, which is a major liquidity area here, all the way over. So these are relative equal lows. This will be prime territory for a sweep. So now if we do see a continuation higher at the open, and we go into a sweep of these 8 a.m. highs, I'd then be looking for some type of indication that for a short, because we do have these relative equal lows, and I believe the market will come down and get these lows before going higher, maybe even before getting to those London highs. So we'll see. Maybe we'll see a rejection off this 15-minute gap here, and that'll be good enough for our 8 a.m. sweep. But either way, we're going to stick to our strategy here, and we're going to look for a sweep of these lows or these highs before getting into a trade. So we have our if and then narrative there. So if we sweep these 8 a.m. lows and hit into this 15-minute gap, then we'll look for some type of inversion on the lower time frame, whether it be a 1 minute, 2, 3, 4, 2, 3, or 5 minute IFEG for our entry. On the other hand, at the open, if we see price continue higher and we don't get a rejection from this 15-minute fair value gap and somehow, some way continue all the way higher up into these 8 a.m. highs, then I'd be looking for a sweep of these highs into, let's see what we have here. We do have a 1 hour FEG here as well. So I'd be looking for that tap into that 1 minute, that 1 hour FEG for then a target down into those relative equal lows down there. So that's kind of the plan for right now. That's what I'm looking for. So we'll see. And depending on how the market goes, how price goes, I thought about scalping into the highs if we go above this 15-minute fair value gap. So say if price starts, barcoding around, start consolidating in this area, and we get a IFEG above this 15-minute, we've only got about 40 points up into those highs. If we go consummate encroachment, 50 points consummate encroachment, that 1 hour fair value gap. I mean, you could scalp in there. It would have to be an IFEG of this 15-minute to give me confirmation that we're going to go higher. We're not just going to wick this gap and then come lower. But that's a far off, because that means that we didn't sweep our high or our low. I'm just going off of IFEG of a higher time frame, which would be their 15-minute. Go down to our lower time frame and see what type of structure we're looking at to maybe scalp into these highs. But as is right now, the higher probability trade is a rejection from here. As we can see, it's rejecting from our 8 simple moving average, our line here, which I usually keep on there as indication points. They can either be resistant areas or support areas due to average, what price has been doing on an average scale. So on an average scale, every 8 candles, this is our 8 simple moving average. It's rejecting from there, which is aligning with this bearish 15-minute fair value gap, which is sending price lower, which is good. So at the open, we're down to less than a minute before the open. So let's see if volume comes in, if we sweep these lows, and then we'll go down to the lower time frame and look for some well, let's go down there now since we're there. I want to mark out there our gap. So this was our open, our close from Friday. So let's do that there. Boom, that's settlement from Friday. So we got our gap there. All right. So let's see where we open. It's not going to be much of a gap. Our new week opening gap. So let's see. So we're at the open now. We're looking at some push to the upside. We're going down here to the down. So let's see. Looks like it's trying to push up there. Getting a rejection from consummate encroachment, that 15-minute fair value gap. So it looks like ES is a little bit stronger than NQ right now, a little bit more bullish. Yeah, so you got our first 15-minute candle. It's looking a little bit more bullish here, or NQ is a little bit more indecisive. So let's see, we've already closed that that gap from Friday. So it looks like it's playing around in the middle of the range here between those 8 a.m. lows and those highs. It opened below our prior day highs, so we could see lower prices. We're looking for that sweep of these lows into that 15-minute fair value gap. And then we'd be valid for some longs here. So let's just see. We're going to be patient. Let's see what price wants to do here. It feels good to be patient in the beginning instead of trying to FOMO into a trade or trying to get into, wondering when we're going to get in so we're going to stay. We have a plan. We have a strategy. We're going to stick to our plan. That's well within our strategy. So we have the strategy, which is a sweep of the 8 a.m. highs or 8 a.m. lows, along with a key level or a higher time frame PD array. So once it sweeps either the 8 a.m. highs or lows, we're also looking for a tap into a key level, whether it be London highs, Asia lows, London lows, or a higher time frame PD array, such as a 1 hour fair value gap, 15-minute fair value gap. As it is today, we've already swept Asia lows and we swept Asia highs pre-market. We have London highs left here at the top. So right now what we're looking for is the plan that we created within our strategy, which is a sweep of, number one, these lows, 8 a.m. lows, and tapping into our higher time frame PD array, which would be this 15-minute fair value gap, consummate encroachment. I did mark out our daily bullish order block, top of our bullish order block here. So if it does sweep and see a push down, I'd be looking for here, which lines up with our 200 simple moving average, which would act as a support, which would give me further confirmation of a rejection here and a move up. So if we get a sweep, let's see how far down it goes. We go down to the lower time frame and look for some inversions to get into a trade. So we have our plan, we have our strategy. I feel good, not worrying about missing anything. Or anything like that. So we're looking good. We got a sweep of our lows. There we go. Tapping into this 15-minute. Nice push down. That's what we wanted to see. That's what we wanted to see there. So let's go down to our 1 minute. See what type of, this is our 9:30. Boom, boom, boom. So let's see if we can create a fair value gap here on this 1 minute. We got about 5 seconds left. That was a nice expansion candle there. Let's see how this candle does here. This 1 minute candle, if it leaves us a gap. And then if we get a fair version, a FEG here with an inversion, I'd be looking for an entry there. So let's see. So I'm just going to draw us out here. That's a nice gap. That's a nice 1 minute gap. That's a nice, healthy 1 minute gap there. I like that. Well, it's not technically a gap yet because this candle hasn't closed. But the more bullish this candle get, the smaller our gap gets. So we got about 8 seconds left. 3 seconds left before we hit this gap. So this is our 1 minute gap here. It's our first presented fair value gap. So I'm looking for a break and a close above that gap. We get a close above that gap, I'm going to jab that. I'm going to be patient. I'm going to wait for the close. I'm not just simply going to wait for the wick, because we can wick above that gap and then close below it. I'm gonna wait until we get a nice close above that 1 minute, and we're gonna jab it. And we're gonna keep our stop loss tight, because if we're wrong, we want to be wrong quick. I'm gonna go in not too heavy, probably about 2 or 3 micros. So yeah, we're not closing above that, which is good. That's good. It's given us a good reaction off that fair value gap. Now, I'm not disappointed that we didn't close above that fair value gap, because that shows me that that fair value gap is significant. That's causing reaction in price. So when we finally do close above that fair value gap, that will give me higher confidence that we're going to continue upwards, simply because it didn't just create the gap and then fill it automatically right off the break. There's some resistance there. That means there's some sellers there. That's an area of interest for me. So when that area of interest gets tested again, and we close above it and inversing that 1 minute, that raises my confidence in there. So instead of going in 2 micros, I may go in 3 micros once on that inversion, and then add as we continue upward. So as of now, we've completed part of our objective here by a sweep of these lows and a tap into this 15-minute fair value gap, consummate encroachment. We got about 6 minutes left in this 15-minute candle. Let's see where we close. I'd like to see a body close above consummate encroachment of this 15-minute gap. We wicked all the way down inside this gap. So if we can get a close above this gap, above consummate encroachment, and an open up, that would be a nice indication that we're going to see higher prices, along with that inversion of the 1 minute FEG. So we're getting a nice rejection area here. So between this 29,729 area, 730, which is a psychological area, those 730s. Then we have here around the 840s. So between the 840s and the 730s, we have sellers and buyers. So let's see who is going to win this battle. We got about 5 minutes left in this 15-minute candle. So if we sweep these lows and it doesn't show us any type of bullish indication that we're going to see some higher prices, we may be looking for some indication of lower prices, which would maybe be an inversion of this 15-minute fair value gap. And we do have prior day lows down here and our bullish order block, but I'd much rather shoot for longs than go for shorts. So shorts aren't really high probability for me. I'm not totally against it if that's what price is showing us. We can see here we have had a pretty healthy pullback here in this area. Let's see where we are here. So we're still in a premium here from our exterior low to our exterior high. This is our OT area here, which aligns up with our daily order block here. So we could see price go far down as into this area here, and then look for a confirmation to the upside. So we could see price go down into here as low as into here. This darker green area is our optimal trade entry area here, which I just put into my Fibonacci tool. So we're in a premium until we cross here. Then we'd be into discount, which would be more higher probability for longs, meaning because, you know, buyers, they want to buy at a discount. So if we get down into this, cross this middle area here, down into here, we'll be in discount. And then from there, we're going into our OTE, which is this darker shaded green, which aligns with my daily bullish order block, which is even higher confirmation of longs. So I'll leave that tool in there. So that's basically what we're looking down to here. We could go here, see something like boom, 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 and then, you know, we could see something like that, which just requires a little bit of patience. That's a few moves right there. But hopefully we'll get it on this AM session and not the PM session. We have about 2 minutes left in this 15-minute candle. We can see that buyers are putting up some nice resistance here. Even though it wicked below this 15-minute gap, we still have an opportunity to body above consummate encroachment, which is what we're looking for. So let's see how we're looking there. But the ultimate entry confirmation would be an inversion of that 1 minute FEG, which as of now, it's pretty much been holding price down for 1, 2, 3, 4, 5, 6, 7, about 7-8 minutes. It's been holding price below our 1 minute FEG, which is here. This is our 1 minute, our first presented. So that's good. We got good good indicators here for price. So if we invert above this 1 minute first presented fair value gap, that means we'd be sitting above our simple moving averages, the 8 and the 20, and we'd be riding one up into these 8 a.m. highs, which would be really good. Let's check our 15-minute there. So we got less than a minute that we might get a body close above this consummate encroachment, which is good there. So let me just put something small there because I want to stay on our 1 minute here for this inversion. So this is consummate encroachment of the 15. I'll just put kind of OCD. I gotta have capital letters there. All right. So that's what we're looking for. Looks like we're getting a body close above that. We're getting into our consummate encroach, our 1 minute fair value gap. So we're coming in. So let's see here. This is our 15-minute candle here. We just opened up a new 15-minute. We closed above consummate encroachment. That's a nice bottom wick there. We may see it go down into at least 50% of this prior wick before it coming up. which is good. It's following protocol to the T. This fair value gap, see how it's reacting? It's been holding down price. So when we finally break above here and body, I think we're gonna go pretty hard. So I'm just gonna mark out on my trade of 8 here so I can get my levels where I want to be. There we go. All right. Let's see if we can get a body close above that 1 minute. That's what we're looking for before we jump into this trade. So we did get a body. I'm just waiting for a break of that 1 minute high there. So let's test the waters and take the jab there. So I did take it on my Trade of 8 account here. This is our paper trade account just for visual purposes. But we are over there and we're live on our Trade of 8 account. So we're in this trade. We inverted above that first presented fair value 1 minute fair value gap. We swept those 8 a.m. lows, tapped into our 15-minute FEG, and we're in it. So let's see where we are. So I took 3 micros on this trade. If I see it a small retracement but a respect, and it continues to respect that, if we see a retracement, so I took 1 mini on our trading view account just because this is our paper trading account. This is a $100,000 account. We're up 47,000. So but on my Trade of 8 account, it's a 50K eval, so we're trading micros. Here we have minis. If I see a rejection down, a retracement down into here, but continue to respect our fair value gap, I wouldn't be opposing to add and continue higher as we continue higher. So midnight open would be our target, our first target here, and cut some, take something off. So that's our 878 area. Or 878. 878. So we're in our 950 macro. So we'll see if that macro will deliver us where we want to get to. Higher. we definitely like to see for a nice confidence booster is a break of these highs here, getting above VWAP and our 200. Once we get above VWAP and our 200 and break those highs, we'd see nice confirmation. So we're continuing to respect this 1 minute fair value gap, these wicks. We can let the wicks do the damage, but the body will tell the story. So long as we continue to body above consummate encroachment of this first presented fair value gap, I still feel pretty good about this trade. So it is testing that first presented fair value gap. So we're experiencing just a little bit of drawdown here. If we start the body below this FEG, I'll chop this trade. We haven't bodied below that area as of yet. And it may just tap us out here. I did put our stop loss here instead of at the bodies, at the wicks, simply because if we start to get below this area, these areas here, I don't want to be in that trade. I may put our stop loss here, at least to these lows here, just to see, just to give us some safe territory. There we go. On my Trade Evade account, I have it below on these lows here. So let's see if our 950 macro gave us a little bit of manipulation, gave us a little bit of a higher low there. So let's start to rip above and start to break some of these highs. So let's go to the 5 minute and let's see, instead of that 1 minute, 1 minute is kind of volatile there. So let's stay on the 5 minute and see what these candles are telling us here. So it's retesting those 8 a.m. lows. That's a good. We got our new 5 minute candle open above those 8 a.m. lows and starting to shoot higher. So we're just being patient and seeing if this was just some manipulation for the 950 macro, and it'll deliver us higher as we get into this new hourly candle. We got about 5 minutes left. Hopefully we won't deliver too much lower before delivering higher. If we do, I will chop the trade and look for a better entry. So I don't want to take too much drawdown, especially on the Trade Evade account. but I also just don't want to chop a trade and give them a a negative P&L when we could have just stuck in and not experienced that. Because once we chop the trade, we've kind of locked in our realized losses. You have unrealized losses and you have realized losses. So unrealized losses is the drawdown. You'll see your P&L go down while you're still in the trade. As long as you're still in the trade, those losses won't be realized. But as soon as you exit the trade, those losses are then realized, then subtracted from your P&L. So at times it's good to stop the bleeding. That's why we have the stop loss, to stop the loss. Doesn't mean you've lost the trade, but if you can withstand the drawdown and feel as though you're on the right side of things, um, staying in the trade and letting it play out from those unrealized losses to unrealized profits, and then we start to realize profits by taking profits. So that's the goal. That's the key. Keep our losses small and our profits big. So as of now, it looks like we're creating some bullish structure here. Even on the 5 minute, we see price coming here, um, tentatively creating higher lows. Once we start to break some highs, these will be um, confirmed higher lows, but we have to break this high first, and then this low would be protected as well, because this is the low that created this high. So once we break this high, this low would be protected, and we should see higher prices. It was good that price did come down and sweep these 8 a.m. lows and these relative equal lows here. There was a lot of liquidity there. I wanted to see price go higher immediately from there. We sort of did, but then it kind of retraced, came back down, maybe to get some more liquidity from there and retest those 8 a.m. lows, and now it's kind of crawling up. So we got about almost a minute before our new hourly candle. So let's check our hourly chart to see. So we got a nice bottom wick on that hourly candle. That looks good, but we also have a top wick there. So that shows some indecision. So at the open of this new hourly candle, we may see some drawdown at least into 50% of this hourly candle. 50%. Anything below 50% of this hourly wick is not something we want to see here. So let's mark that out there. That's consummate encroachment of the hourly wick. So we are back into the green there as we approach that hourly candle. We opened above on the 5 minute. That's a good indication. I love when candles open above those inside candles on the 5 minute. That usually indicates that we'll see some higher prices. Being as though price isn't shooting up with more strength and volume, we may look for a lower target, being New York midnight open and prior day highs. So let's break these highs first, then let's get into these prior day highs, New York open, and that may be a pretty good. So I think New York open, we're going to at least shoot for these 8 a.m. highs. But I believe we're going to go all the way up there. Just got to have a little bit of patience there. Yeah, generally I'd like to see price when it's opening. It kind of open equal to this inside bar here. Um, so that's probably why we're seeing a little bit of rejection here. You see that it's rejecting right off of Friday's closing. That's a major area of interest there. So once we break above that area and start to break these highs, we should see a little bit more smoother price action. We're into this 10-10 macro, so let's see. We got some. We experienced some manipulation to the downside of that 950 macro, which is good, which is healthy when we're looking for higher prices, sustainable higher prices at that, not just a wick up and then shoot down. When we see pullbacks, experienced traders, they won't get nervous, they won't get scared. They'll know that this is building a solid foundation, solid structure for sustainable higher prices, higher price action. So we've seen our nice 950 manipulation to the downside. This inside bar opened at the 5-minute, and then we opened right at the top of this inside bar, which usually is an indication of higher prices. I mean, there's whole strategies built on trading these inside bars. So when you have an inside bar and the next bar opens above it, the strategy is to take the trade, whether it be long or short. If it opens below, you take the short. Opens above, you take the long. Then you put your stop loss below that inside bar. That's a whole strategy in itself. Some traders use that right there as their whole entire strategy. So we're about 3 minutes into this new hourly open. It's 10 a.m. We like to see smoother price action to the upside. We are getting some retest of the areas that we're breaking. We almost got above this high here. So once we finally break above these highs, it may break above pretty aggressively. Right now we've seen some rejection of VWAP there, which is standard. We see rejection of a VWAP, and then once we break above VWAP and start breaking above these highs, we should see some pretty good smooth price action to the upside. We have a lot of low resistance liquidity, a lot of low resistance trendline liquidity here for price to be drawn to. So let's just see. Let's see where we go here. And now we're starting to see there's a nice movement to the upside. Still haven't broke this high. But they always say anything worth having is worth waiting for. So we're waiting. There we go. We got a nice break above that high. So let's get a nice close. Let's see here. So if we got here, we got it to midnight open. That's a nice 70 pointer. I'd be happy with that. I'm not going to be greedy. I'll tell you that much. I'm not going to be greedy. I take that all day long. Yeah, so let's get up in there. Let's get up in there. Now we're starting to see some breakout. So I'm dragging my stop loss up, not into break even, but into profit on my TradeEvade account. Here's my TradeEvade account. I dragged my stop loss to the bottom of this candle here. We're up about 430 in profit. I'm locking in profits. I see profit take profit on these evals. I understand that we may see higher delivery to the higher objectives here. I do have a nice takeoff, 2 contracts, 2 micros once we get up to those 8 a.m. highs. So if we hit that first, that'll be a nice trim. But if we come down, I'll take what we got up here. I'll take that all day long. There we go. All right, so it got us out there. And I will re-enter once we start getting above and looking like we're getting into higher prices. But as of now, we locked in 386 on that. But here on our paper trading account, we're looking pretty good. We're going to drag our stop loss up into profit. Well, $200 there. So we do have another 1-minute FEG here. And for some people, they're just getting in, waiting on confirmation of higher time frame FEGs, which is that's not bad at all. But it just allows me to exit and re-enter and still feel as though I haven't missed anything. So we're looking good at hitting our first target, those 8 a.m. highs. So it played out pretty well. So once we get up to our 8 a.m. highs, I think I'll put our trade there, just a little bit above there, above those 8 a.m. highs. It's turned out to be a nice trade. And then what we'll do here, that was a nice 1-to-1 trade there. So what we'll do here is I want to look for a 15-minute change in state of delivery. So once this 15-minute candle closes and we get a pullback, I'd look to re-enter for a second trade. And we'd be going for our London highs, buy side liquidity, to finish out this LR. So all in all, we got a nice trade sticking with our strategy there. We waited for a sweep of our 8 a.m. lows into a key level or our higher time frame PD array, which was our 15-minute fair value gap. We traded down to constant encroachment of that 15-minute fair value gap. Then we went to our lower time frame and we waited for an inversion of our first presented 1-minute fair value gap, which we did get. We got it here. It wasn't a strong, it wasn't a high inversion. Let's see, was it here? Yeah. Yeah, that's what we got it here. We got it here. So we entered here. Then we seen some pullback. But we never went below our lows or constant encroachment of this 15-minute wick here. So it's typical to see price pull back into the halfway point of the prior candle's wick. So price never crossed constant encroachment of this prior 15-minute candle wick. So we were still good, even on the 1 minute where we seen price start to pull back and close below our first presented fair value gap. Being as though it closed above after holding price down for so long, it showed us some buying strength. We did see, maybe we seen some take profits here or whatever to cause price to go down, created a higher low, which then still staying above constant encroachment of that 15-minute wick. Then we started to see higher prices and trading into our target, our 8 a.m. highs. So our 8 a.m. lows to 8 a.m. highs strategy and our plan complemented each other, and we got in. So now what we're doing, I dragged my stop loss up on my TradingView account. We're ready to hit just above our 8 a.m. highs. Just wanted to squeeze out just a little bit more. I'm going to put it here. Just wanted to squeeze out just a little bit more above our 8 a.m. highs. We did go a little bit above. I just put it at the, well, what I did is I measured it out on the 5-minute. I put it at the top of the body of this 5-minute candle. Starting to see just a little bit of rejection there. But either way, we're profitable on this trade. It was a good trade. So it hit our stop loss. We went up into the New York midnight open, 8 a.m. highs. So right now, what we're looking for on the 15-minute is a change in state of delivery, which would be a close above this area, above those 8 a.m. highs. Well, a close above here, above this high. So we get a body close above here, which we're pretty far above here. We get a body close above here, then maybe see a little bit of a pullback, and then look for a re-entry into higher prices. So we got our change in state of delivery on the 15. Let's see if we get some type of pullback here. We have a 5-minute FEG here. Prior 5-minute candle wick here. So see if we'll wick down, tap us in, and then go on up to our London high. It looks like it tapped us in there. We're seeing a nice little pullback here on the 1 minute. So we did get tapped. We tapped in after we got a change in state of delivery on the 15. We put our limit order in for the pullback. It tapped us in, and now it looks like it may push us higher where we'd like to see price go. Maybe even deliver us to those London highs. We're seeing some rejection off of our 200 simple moving average there. So let's see if we once we break above that 200, we broke above VWAP, we broke above our lower uh, simple moving averages. So let's break above that 200 and then move on up into our London high. We got this low resistance trend line liquidity here. So once we break above this last line of defense here, this 200 simple moving average, we should see some higher prices. Should see price deliver higher pretty smoothly. So that's the idea anyway. Of course, anything could happen. So let's see where we go from here. So we're in discount now. You can see on our tool here how price went up into our OTE area, and it's rejecting from there. Looking at a little bit of a rejection there, which is standard from our key level standpoint where we marked out. I really don't want to see price go a lot too far lower than that, so we got our stop loss here. Let's see where we are. Oh, I didn't want to do that. I want to see where we are here. So on this interior leg, we're still here. We're still good. We haven't hit 50%, below 50% of this area here. So this is our interior leg. We had exterior to exterior. So I have exterior to interior. So we could see a pullback into the halfway mark and then start to see some push to the upside. When we start breaking below this area here, that's when we start wanting to, it's not looking good. We start breaking this area and start closing below. That's not what we want to see. But this is good. This is a good rejection here off of that 50% mark of that leg. So we go down 50%, come back up. We may even see a little bit more of this, But as long as it gets higher each time, that's what we want to see. Not every trade is going to be entry TP straight off the bat, but that's when you have to be familiar with market structure. You have to be confident in your strategy, and be confident in your skills as a trader to read price action. And this is what we're doing. We're reading price action now. We're reading the tape. We're seeing that we created a lower high. Well, we created a higher high because this was a high that was broken. We broke this high, came up, came down on a retracement after a break of the high, which is normal. You see a little retracement after you break a significant keyed area, which was this high. And it's higher. This high is higher than this high. So once we break this high, then we've created another higher high. And if we break this area here and this area, these are relative equal highs. We may see another small pullback, then up, break another high, another small pullback, then up. That's price action. That's sustainable price action. That means that some crazy news story didn't come out and price just skyrockets or tanks, which is in this market is very, we've seen that. It's very probable in this market. Trump gets on, or some finance guy gets on and starts talking about the war or inflation or whatever. That's when you start seeing these manipulation wicks, these news candle wicks, these data wicks. That's why we typically don't want to trade when we know that major red folder news is coming out, things like that, because you start to see a lot of volatility in price. But as of now, it looks like price is moving at a steady pace. It's not flying up to our TP like we'd like to see, but it's creating sustainable structure to the upside, which is something we'd love to see. So let's stick with this re-entry. We already had our first trade, which turned out good. Let's see, let's see if I can't put it on here. Yeah. So we got here. This was our first trade. We got in here, basically, and then we got out here for a profit. And we got in here. Now we're looking to get out up here for our second trade. So our first trade, we got in at 29,807. We got out at 29,875. So that was a good over 60 points there, which is pretty good. So we got over 60 points on our first trade. We waited for a 15-minute change in state of delivery when we closed above these highs here on the 15-minute candle. After a close above those highs, we've seen some drawdown, a little retracement back to retest that area, not crossing 50% of that leg there. And now we're starting to see some movement to the upside, which is showing strength and, and bullish momentum. So now what we're looking for is a break and a close above this 200 simple moving average. So every 200 candles, this is the average. This is the average area for 200 candles. So that's, I keep my 200, my 20, and my 8. So every 200 candles, every 20 candles, every 8 candles, then I have my VWAP. So those are areas just for visual confirmation as to what price has been doing. Areas of interest as far as support and resistance areas. But our main strategy is at the open. We look for a sweep of either these 8 a.m. highs or these 8 a.m. lows, along with a key level of interest, whether it be London highs, London lows, Asia highs, Asia lows, or a higher time frame PD array, which we did today. We swept those 8 a.m. lows. Price tapped into that higher time frame 15-minute fair value gap, and then we inversed the first presented 1-minute fair value gap, which allowed us for an entry here, and we got over 60 points on that first trade, and ultimately it delivered us higher to these 8 a.m. highs. So that's what our strategy called for. That's what it did. We had a plan within that strategy, and which was executed, and now we're just taking on a second entry, a second trade, and let's see where that takes us. So we get back into positive territory here on this second trade. Again, this is our TradingView account. We did execute that first trade on our Tradovate 50K eval account, and I'm pretty good with that trade. So again, we do on this TradingView accounts, we kind of take trades for learning purposes and forward testing. So we got into this second trade based off a 15-minute change in state of delivery. Once we got a break and a close above these highs here, that created our change in state of delivery. We've seen we put a limit order down here. I entered on the 5-minute, I believe, on this. So I put my limit order here somewhere. Well, obviously here. I put the limit order here, and it got us in. Let's see, did I enter on that? Yeah. So I put my limit order there on the 5-minute. Put our limit order in there. Well, actually, yeah, I did. Put the limit order in there, and it tagged us in, and then we were looking for a move up after a small retracement. So again, this is our second trade. I took this trade on the TradingView account, but not on my Trade of 8 account. So still almost a 1.5 RR. I usually look in this market for 1-to-1s. 1-to-2s are good, are great. 1-to-3s are excellent. Whereas before, we would do a standard 1-to-3, but right now a 1-to-1 is pretty accurate in this market. We're looking to see if we could break this high here. Should be good. Yeah. So either way, we did some good trading today. I'll probably go ahead and close out our stream here. You guys can see what ultimately happened here. May end up pulling our stop loss up, at least to this here. Once we break these highs and this low is secure, I'll drag my stop loss up to this low here and look for a continuation of this trend line liquidity being taken out. But right now price is kind of, tiptoeing, and we pretty much executed our strategy and our plan with that first 60-point trade. So there we go. So that being said, I think I'm going to go ahead and close out this stream. I'd like to thank everybody once again for checking me out, whether here live or from the future. We got a pretty good session. It's a Monday. We'll take what we got, and we'll be back tomorrow. Same time, same place, same strategy, probably a new plan. That's how it works. Thanks again. I will see you guys on the other side of today.